Today, we will go deeper about trading divergences and make stronger entries with a double divergence system. I've been using divergence strategies for so long by trading RSI divergence and Mete divergence. Identifying divergences are easy, however, entries could be hard. We'll cover double divergence trading system, additional confirmations before entering positions. Finally, I'll show you a position with 50% profit that I missed the divergence but got the next pattern. In the next video, we'll cover 5 different examples. Hello friends, hope you're doing great. Let's learn how to trade divergence systems again with additional confirmations with little touch-ups. I've made everything quite clear and simple for you. We'll go over everything step by step again. If you're ready, let's start. Okay people, let's talk about divergences in detail. Starting with this great cryptocurrency example. I'm sure that you remember our first video about RSI divergence with momentum boxes. What we're gonna do here is improve that strategy and make more money with it. As you can see in this chart, AVAX was consolidating for quite a while. However, at one point in time, we are getting this sharp drop and forming our first significant low out of the range. Then, as you can see, the security starts a downtrend by performing lower lows and lower highs. If you remember the previous method, I'm not trading for significant low and the second low to get my momentum boxes. Here, as you can see, my tradable lower lows are the third and the fourth ones. People are asking me how I find these setups. I'm not magically ending up with the divergences. I go over each security when I see a clear up or down trends. I add them to my watch list and wait for third or fourth significant swings. Okay, let's check the divergences. This time we will additionally check the MACD histogram with RSI. As you can see, both MACD and RSI are diverging from the price. Now this gives me an indication of a possible reaction. Warning. I am not saying the trend will reverse. It may reverse or not, we do not know. I'm not the market maker. However, I'm quite optimistic that there will be a reaction. In our next step, we will be checking the momentum boxes if we are losing the momentum. So we are comparing the second and the third momentum boxes, taking into account the lower lows. This method comes from Wyckoff's book, A Signal of Strength Loss. As you can see, the last box is much smaller than the previous box, a great indication of seller exhaustion. Now before the entry, I want to teach you a couple of things first. These are little confirmations that you can check out before entries. You'll be seeing these in every chart. 3 important candlesticks: pin bars, hammers, and spinning top and bottoms. These candlesticks are really special candlesticks that every single trader should know. These candles mostly appear at swing points with long wicks. Gives us clues about smart money actions and stop loss hunts. Whenever I see these candlesticks at swing points, especially with the high volume, I immediately know that a reaction is close. It is not certain, but it is close. As you can see in our example, the pin bar is quite obvious with a massive high relative volume. You will see these candlesticks in every single time frame from weekly to 1-minute charts. So combining these with divergence strategies is quite powerful for finding entries to get a quick gain. The second thing I look for is strong resistance and support areas in high time frames and possible big round numbers. When I see a strong support or resistance areas, I immediately know that there could be a reaction. Again, I'm not saying trend reversal, a reaction. We traders mostly play for reactions, get in and out from the positions. Because no one in the world can 100% be sure of trend changes. we can only make educated assumptions. All we do is get a bite from the smart money, not to predict smart money's trend direction. If you look at the high time frame, you will notice that it is an extremely critical support area, tested many times. So a great price level for a reaction. Also, again, $75 is an important round number, and price always struggles. Okay guys, let's check out the possible entries. The first thing I look for is a stock RSI crossover below 50 line. As I said many times, never ever use stock RSI alone for your entry or exits. It's just a helper after all your confirmations. Actually, stock RSI even slower than the RSI and quite lagging. Why do I use it then? The answer is so simple. I know when and where to use it, and I'm quite successful with this indicator. Normally, I would like this giant red candle to be taken out by the buyers before my entry here. But whenever I see a pin bar with a high volume, I take my risks and enter with the next green strong candle. By the way, I always enter long positions with green candles and short positions with red candles. This is how I trade. Some people out there use the wicks for entries, but I do not do that. I place my stop loss under the bottom of the swing point under this wick. My take profit will be like 2R as usual. In the future, I'll be teaching more profound concepts for better take profit targets like order blocks, imbalance fillings, liquidity targets, so you can target like 3R, 4R or more. Well, we will slowly evolve from retail trading to smart money trading on this channel. Now we will learn Quasimodo pattern. Assume that you have missed RSI divergence in this example. However, trading possibilities did not end yet. Before everything, the number one lesson of price action is understanding the market structure and market structure breaks. Almost every chart pattern and trading strategy are based on market structure breaks. MSB is one of the strongest signals of ending momentum from one direction to another direction. However, it is not a rule. Nothing is certain in trading. If you pay $1,000 for courses for advanced price action concepts, this will be your first lesson. Don't worry, I'll teach all of this for free on this channel. Please subscribe to learn more. Market structure and market structure breaks are quite simple. As you can see, when we are in a downtrend, the moment we break the final lower high to upside, that is our market structure break. Vice versa, in an uptrend, the moment we break the last higher low to the downside, that is our market structure break. You will not believe how many trading strategies are based on MSB in the future. I'll be teaching all of them. Okay, let's understand the Quasimodo pattern. Very similar to the head and shoulders pattern. The only difference is the market structure breaks. It involves three simple steps. Step 1. You confirm the market structure break for the first signal of momentum change. Step 2. You're waiting for the first higher low, which has a similar price level with the left shoulder. Step 3 is the entry. Confirm an entry with bullish candlesticks after a pin bar hammer or spinning bars. Or go in lower time frames to identify other small market structure breaks. Okay, let's see it in a real example I took a couple of days ago. Okay, I've missed this amazing double divergence setup with RSI and MACD. However, I knew that if market structure break happen, there could be a Quasimodo pattern, so I set my alarm and regularly check this chart. Let's check the entry. Step 1. Confirm market structure break. As you can see here, we are breaking the recent lower high here and making a new high, confirmed the MSB. Step 2. Confirming first higher low, which has equal price level with the left shoulder here. Step 3. Now, this green spinning bottom was my first significant sign for the entry. When I see this in swing points with other confirmations, I take my risks and enter the trade with the next green candle. At this point, you can enter the trade with the next green candle. You can also go lower time frames for more confirmations. Since I am a pro TradingView user, I also check the volume profile as well. As you can see, this is the highest volume node, a natural support area. I know that there will be a reaction here, and I place my entry. My stop loss was under the spinning bottom candlestick. Okay, this is how I played this trade. Again, we traders are playing with reactions. This is why we use our R-risk-reward ratio systems. We do not know the trend direction. Only smart money knows it. We only make guesses about trends. We are here to get small bites from the smart money. As you can see, after my trade with the Bitcoin breaking below 40,000, AVAX dropped sharply. I took my profit at 2R and moved on with my 50% gain. One more time, traders play for reactions, not trying to guess trends. I make assumptions about trends. With the market structure, I can't know it for 100%. Okay folks, I hope that you can use this RSI and MACD divergence strategy and additional confirmations easily. Divergences are proven trading strategies. Once you get used to them, everything will be much simpler. Would you like to subscribe to the channel and help me to grow it? Thank you, take care and see you soon.